What's poppin', billionaires gang? How you guys doing? Welcome to another powerful video. So in today's video, guys, I'm going to be teaching you guys something very unique. It took me a long time to figure this out. This is something that I've been using. This is something that has really helped me a lot, to be honest with you guys, how to understand market direction using Fibonacci. Major issue with technical analysts have is trying to figure out which direction the market is going every day, especially if you're a day trader or probably a scalper. You can have entry confirmations. Probably you're using an engulfing candle, multiple week rejection, and all that beautiful stuff. Probably you're using something else as a confirmation before getting into the trade. But the major part is understanding turning point for the market and which direction the market is going next. That's why I'm bringing this to you guys, just to help someone somewhere. This might be your missing link. Alright, so what we're going to be doing is I'm going to be using Fibonacci to determine the market direction. I'm going to be also be giving you guys turning point. With that being said, guys, let's go straight to the chart. Quick disclaimer, guys, what works for me might not work for you. Everything that I'm giving you in this video is just my belief and things that have worked for me that I've thought to share with you guys. Do your due diligence before trading this Fibonacci strategy. As you guys know, market moves in waves. We have a phase of an impulse, we have a pullback. We have another phase of an impulse, we have a pullback. We have an impulse, we have a pullback. One of the things that I believe that makes that happen is after a very strong run, all right, a lot of people are taking their profit. The banks, the market movers are taking their profit. So while they're taking their profit, price pull back to relax for some time before moving up again, before people start putting in their money again to push price up. All right, that is one of the reasons why we have a pullback. How does Fibonacci work, and why does Fibonacci works for chart, right, for technical analysis and all that beautiful stuff? All right, so now first of all, I'm going to be teaching you guys how to get a Fibonacci on the chart. All right, all you have to do is we have the third one right here. Just click on it. Start clicking at this point here. It's going to give you options. Right, the one we need is just Fibonacci retracement. Fibonacci is used to measure the percentage of an impulse. All right, so let's say peradventure we have an impulse right at this point here. All right, we can use Fibonacci to measure the impulse. All right, just like this. All right, so now this is divided into stages. We have the 50%, we have the 0.6%, we have the 0.7%. Just like saying we have the 50% pullback, we have the 60% pullback, we have the 70% pullback, we have the 80, we have the 90, and we have the 30% pullback. All right, a valid and a fulfilled pullback has to at least be on a 50% pullback. All right, so you don't want to be trading a pullback that just we have a run right here and we have just a very short pullback at this point here, and you say okay, price has pullback, now price is making its run. All right, as time goes on, price is definitely coming back to pay the debt. That's where my idea for debt come from. For every run, if the price don't come back to my strong Fibonacci zone, which is the 0.5 and the 0.6 zone, so I treat this as a zone. All right, 0.5 and 0.6. I box it because I want to see a reaction when price get to that box. For every single time price comes back to that box, it's a fulfilled journey, a fulfilled pullback. All right, then the price can continue its uptrend right at that point. That is my belief, and that is how I trade it. All right, so in a situation where price didn't get to this box, I will treat it as a debt, which I know price will definitely come back to pay. So now, how do I use this to understand the market direction? It's by having multiple debt paid run. All right, I want to look for two fulfilled journey. All right, then I will consider it an uptrend or a downtrend. I draw my Fibonacci on the chart including weeks, and I pick the highest point the price get to. So let's say for instance this is the lowest point price get to previously, and this is the highest point price get to. This is the new lowest point price get to, and this is the highest point price get to. Right? You'll be able to determine the highest point and the lowest point price get to by a Fibonacci fulfillment. All right. So now, just at this point here, we have the highest point price get to and a lowest point price get to at this point. Let's say we don't see all this point here. We don't see all this point here. What I want to expect is for price to push back to a 0.5 zone and a 0.6 zone. Then I will use my entry strategy to get into the trade. Probably I'm looking for engulfing, multiple week rejection and all this. All right. And another thing that really makes Fibonacci works is sentiment, right? Because a lot of people believe in Fibonacci. Just like I believe in Fibonacci, I'm also teaching you how to trade Fibonacci. You're also believing in Fibonacci. So every single time price gets to a particular zone, chunk of people in the world are seeing this same zone. The more people are on the market pushing the price to a particular direction, the more the market goes to that same direction. So taking my Fibonacci from here to the lowest point here, I can see price push back to 0.5 and 0.6 zone. I got into the trade and price plummeted to the downside. All right. When we want to draw another Fibonacci, instead of coming to draw it right up here, we draw it right from here. Why do we draw it from here? Because it has paid its depth right at this point here. So now we drag it from here all the way to the lowest point price get to. All right. And just patiently wait at 0.5 and 0.6 for price to pull back to that point so that we can get into the trade. So as you can see, price get to that point and plummet to the downside. If you're looking for sales, you drag your Fibonacci from the upper side. If you're looking for buys, you drag your Fibonacci from the lower side. So I want you guys to go watch this video over and over again just to understand it. I don't want this video to be so long, that's why I'm not going to be giving you guys so much example, but I want you guys to go back test this and see the power for yourself. Something I want you to take a very good notice of every single time is this pattern. All right, this is an M pattern, or probably you might be calling it a double top, and we have this situation as well, double top and double bottom, probably M or W pattern. All right, so this situation now, you want to pay attention to this whenever it happens, because price might have its reversal at that point. What does this mean? This means that price has an impulse move but don't have enough strength to break above the previous highs. That is a sign of weakness, right? So if the buyers has been dominating the market, they are beginning to get weak. Another thing you want to pay attention to is this guy right here, head and shoulder pattern. What this means is price has its impulse move at this point here, another impulse move at this point here. Then after that, price failed to break above the previous impulse. Right? What this means is the dominants are getting weak and the price is about to reverse. So just at this point here, we can see that when price pushed at this point here, it didn't reverse back to this point here. Instead, price pushed back up. And after pushing back up, we can see that we had this one right here. We had a pushback, which is a weak, all right, a weak type of formation. Then price crashes to the downside. If we say we have an impulse move right at this point here, all the way to this point here, we don't have a pay right at this point here, price continued to push back up. All we wanted to do was for price to get to this key zone right here, key 0.5 and 0.6 zone, for us to continue to look for buys. But in this situation, price got to that key zone, break of it, and move to a 0.6 zone. All right, and still retest this point here and continue to crash down. All right, so these are the early signs that you notice. These are the things that you will notice. Price, getting to 0.5, 0.6 zone and breaking above it, and before then you had a pattern. All right, that is a sign that the price is going to reverse. All right, we had a pattern right at the top here, and all we can see at the downside again was that price broke below 0.5 and 0.6 zone to breaking below 0.7 zone as well, closing below 0.7 zone as well. Right, that is a very strong sign of a reversal. You can also use it as a confluence to your strategies. Alright guys, I hope this video is helpful to you guys. I hope you gain one or two things from this video. Please, all I ask is that you subscribe, join the family, join the gang, right, and give this video a thumbs up. Alright, just to help other people, other struggling traders to also see this. Please drop whatever you feel on the comment section, whatever you think about this Fibonacci strategy that I've just shared with you guys. Drop that in the comment section so that other people can learn from it. And if you have other things you want to add to it, probably you have other ideas, also you can drop that in the comment section. And if you want to interact with other traders, you want to interact with me, you want to send a message to me, you have any questions for me, you can join the Telegram channel. Let's be family, okay? Thank you for watching this video to the end. God bless you, and I'll see you guys in my next video. Bye for now, guys.